Let's bring in focus of our discussion today. Banking stability is crucial for the stability of any financial system in the world. Financial systems regulators understand that a loss of confidence in the banking system can have devastating consequences for the entire financial system. Nigeria has an emerging banking sector, which is ranked third in Africa after South Africa and Egypt, has experienced many episodes of financial and economic recession within the last 2 decades. And this has brought the fragility of Nigerian banks and finance onto the front burner of discourse by academics and policymakers. The recent global financial crisis and its impact on the Nigerian banking sector has shown that CBN's daily forecast of banking sector liquidity is not sufficient in accessing the liquidity requirements of the sector, as several international banks remain relatively fragile and incapable of withstanding periodic liquidity shocks during the period from December 2008 to December 2009. Nigerian banks wrote off loans equivalent to 66% of their total capital. Most of this write-off occurred in the 8 banks receiving loans from the CBN. Joining me now to assess the stability of Nigerian banks who will focus around liquidity is the former president of the Chartered Institute of Bankers of Nigeria. He's a professor of economics, Professor Segun Ajibola. Thank you very much for your time, Prof.
Thank you very much and good afternoon.
Prof, let's start with the issue of stability in the banking system. It's something that is threatening. Once people start to lose confidence in the banking sector, then there is a problem. Now, overall, what's your overview of the current position of Nigerian banking sector, considering COVID and its effect, bad loans, and all that we face at this time?
The situation as we have it today, we can say we are still very safe. That is the banking industry. Just a few days back, the regulatory authorities confirmed the outcome of the recent stress test on the banks, and is to say that there is stability in the Nigerian banking system. And when we talk about stability, what exactly are we saying? We are saying that the balance sheet of banks, when scanned, show that from the assets point of view, that the assets are of acceptable level of quality, and the mix is also acceptable, and that the regulatory requirements as far as composition of assets, structure of assets, as far as those requirements are concerned, that the banks are on the whole meeting there. Then when we look at the liability side, either in terms of capitalization, in terms of the composition and structure of deposits and other items of liabilities, that they are also meeting all with regulatory requirements, and that on the whole, depositors who have their money in the banks can be assured that the banks will be able to pay back their deposits as and when required. And from the asset side, that the banks are also in a situation to collect back loans they are giving out, such that the percentage of what we can refer to as toxic assets is not significant enough to challenge the going concern status of the banks. So it's from operational point of view, it's from regulatory point of view. So when the environment is in a situation that we can say operationally, our banks are okay, then regulatory requirements are also being met, we can say that the system is stable. Now, if we look at what is happening, well, for COVID-19, we know the effects have been so disastrous on so many parts of the world and so many sectors of the world, and Nigeria is not an exception. Whatever affects the economy as a whole will affect the banking system. So as of today, we can still say much as we are safe as an industry. Of course, the challenges of the recent times are also taking a toll on banks in Nigeria. We've seen banks that have rationalized branches, either temporarily or permanently. We've seen banks that have also downsized their staff strength. And of course, because the economy itself has been shut down for quite some time, accessibility to especially loans and advances by whatever type has also been limited. So, and if the economy is projected to be in recession for the end of the year, it will get banking. So, the recent data from the authorities, for example, is saying that non-performing loans in the industry is between 6 and 7%. We pray it is so, but some believe that figure is even understated. And that is a key measure of stability. So COVID-19 is already having effect on our economy, banking inclusive, and if the economy is going into recession, it will still have more effect, and banking is not an exception. We can only pray that at the end of the day, on balance, our entire banking industry will still be sufficiently safe to play its catalytic role in the economy. It is a prayer.
It is a prayer indeed. Prof, I'm looking at efforts also at this time by the monetary side and the fiscal side by side. Central banks maintaining monetary policy and also reducing interest rates from 9 to 5%. And on the fiscal side, we've seen government reviewing the budget and all of that coming out with stipends and also conditional cash transfers for Nigerians. Now, what effects will you say all of this is having on the stability, even on the entire economy at this time?
Very serious effects. Very, very serious effects. If we talk about liquidity, for example, liquidity is from two major angles. There the liquidity from the domestic point of view, which is the Naira issue. Government has been trying, even through monetary and fiscal policies, to shore up the level of liquidity. Let's first of all talk about the domestic. You will realize that recently, Central Bank of Nigeria approved a total package of 3.5 trillion naira for the various segments of the economy. Manufacturing, for example, 1 trillion is affecting creative, health, and so on. Then for the micro, small to medium enterprises, Central Bank of Nigeria has just disbursed about 50 billion, 49.2 in actual figure, to the various segments of the MSMEs in this environment. That is to help the level of liquidity, to rejuvenate the various sectors of the economy, and to make sure that they are back on stream as COVID has ravaged everywhere. But more serious, more complicated is the foreign exchange liquidity. And that is tied to what you have just said. Because ours is an open economy, an economy that relies so heavily on the rest of the world, either in terms of our basic necessities, including food, raw materials, and spares. We need foreign exchange to generate this. Now, we've been having challenges in the global oil market. Thank God it's improving. Just recently, the price has gone up from around 20 during the heat of COVID-19 to about 40 something now. But all in all, that has affected the liquidity from the foreign exchange point of view. And when the foreign exchange market is badly hit, it affects the exchange rate. And you know, as an import-dependent economy, that translates to some negative effects on the domestic economy. It shows off inflation. It creates a lot of problems, including artificial scarcity, including speculative behavior. And that is what is reflecting in the current exchange rate. The official exchange rate has to move from about 305, 307 to 380 naira per dollar. And the other market is now running at about 470 naira. So that is affecting the stability of the economy as a whole. Because we import a lot. Our manufacturers, they rely on imported raw materials. Our households rely on imported items, including basic household needs. So it's already affecting the stability of the entire economy. So what is happening now is that both from the fiscal point of view and from the monetary, government is trying everything possible to see what could be rolled out as palliatives, not only money, because money will not answer all problems in this case. Even how to provide incentives to the various sectors of the economy, how to relax some conditions, operating conditions, how to also shore up the ease of doing business in our environment. So if we put all these in a basket and we look at what the central bank in particular is doing to help the monetary side of our economy, and how the various agencies of government are also trying their best, by the time we put all this together, we believe the negative impacts of COVID-19 that has been so tremendous in our environment, and of course what is happening from outside the country, ours being an open economy, we believe the impact of that will simmer down with all the stimulus package and co that we are seeing. That is where lies the hope. But all these must be implemented simultaneously. It will give out loans, 3.5 trillion, and we don't complement that by resolving other ancillary problems. The operating environment will still be very harsh. And when the operating environment is harsh, then the pressure from a recessed economy will be felt by everybody.
Prof, I'd like to get your comments on this, the issue of Forex, which you've touched on. Yes, we know Nigeria remains more of an importing nation. Now, some have said with stopping or holding on to supply of FX to the Bureau de Change operators is also something that is not helping the market. Don't forget, very soon, international flights will start, even on a limited space and all of that, as instructed by the government, but that will commence. So what do you think about this and the effect on our currency at that time?
Well, the fact remains, central bank has spent a lot in the last 2-3 years to defend the naira exchange rate to the dollar and other hard currencies. But the point is, central bank itself cannot do this ad infinitum, cannot continue indefinitely, because the resources at the other side are also limited. Central bank itself is limited by the amount of foreign exchange reserves available to the country, and there is minimum we must keep in foreign exchange reserve to continue to earn the respect of the Committee of Nations and not to upset our trading partners. So there is limit to what central bank can roll out, and I think that is what is affecting Bureau de Change operators. Now, if we look at what is happening globally, if we are able to, or rather not we are able to, if we continue to enjoy some improvement in the indices from the global oil market, and also in recent times we have been very happy getting some robust remittances to Nigeria. So if we are able to show up our foreign exchange reserves to a level that will be as more than acceptable and will be deemed comfortable for a country like Nigeria with our import requirements, then I think central bank will have the room to operate and support all the other sectors of the economy that are in need of foreign exchange, including the Bureau de Change operators who sell to all retail users, including travelers and so on and so forth. So let's take what is happening now as the impact of scarcity of foreign exchange, not only in the pockets of individuals or corporate bodies, in the pockets of the country as a whole, as represented by Central Bank of Nigeria. And what you don't have, you cannot give.
Indeed. Professor Segun Ajibola, it's always a pleasure having you on the show. A professor of economics and is also the former president of the Chartered Institute of Bankers of Nigeria. Thank you very much for your time on the show today.
Thank you very much.